Good Monday. This is Jay Brew, co-chairman of Seafried and Brew. 10-year Treasury in here at a 2.6% and seems to be pretty well stuck at that level for right now, even with the government shutdown and the looming debt ceiling situation. But we want to be thinking out into the future. As I always talk about, as community bankers, we want to be able to look out in that future to be able to sit there and say, will the Fed start to taper here in October? Most likely not. Into November, still mostly not in here, because we look at our chart in terms of the Fed Phillies 6-month change in indexes looking out into the future in terms of the leading index, still at relatively low levels in here. So when we look at overall right now, it's saying a 1.4% growth rate. And that would indicate that the economy is still going to grow at a slow to moderate pace. This was also how we based our feelings previously on why we didn't think that the Fed would start tapering in here in September, and it would hold out that most likely as we move through year end that the Fed will continue to buy treasuries and mortgage-backed securities. And we can see some of the effect. We want to keep watching these rates, because one of the things we talked about that after the Fed announcement, we really didn't see mortgage rates start to really drop significantly. But it has picked up some speed. 15-year mortgages before the Fed announcement at 3.5%, now moving down to 3.33%. 30-year mortgages, 448, dropping down to 4.26%. Still not as much as what we've seen in terms of mortgage-backed securities. 15-year mortgage-backed securities dropping 40 basis points from a 277 to a 237. So that market continually doing better, most likely being pressed by the fact that the Fed still continues to buy in here. 30-year mortgage-backed securities also moving down about 36 basis points from a 376 to a 340. So we want to be able to watch these rates. Does this change the perception out there in the marketplace that people are going to start refinancing again? Is this enough of a drop in rates to get people to be buying more houses in here? Most likely not. We're going to have to see even more. So that is going to still weigh on the economy going forward, along with this whole debt ceiling situation. And once again, slow to moderate growth means that the Fed will hold off tapering, in my mind, at least through the end of this year. This is Jay Brew, co-chairman of Seafried and Brew. Have a great week.